Welcome. And what we're talking about today is why your CPA doesn't teach net profit and how is that different from take home versus your salary.
Automatically teach that to the clients, though? I thought most CPAs did.
No. So that's the big misconception. And again, COVID exposed this big issue in the accounting and CPA industry is that CPAs, most people that go see their CPA that own their own business are obviously seeing their CPA for preparing their corporate and their personal tax returns. CPAs who are doing those tax returns are really focused on compliance. They're focused on making sure, looking at historical numbers, making sure that you're in compliance, check the box, you filed your returns, you paid your taxes, so the government doesn't come after you. So COVID, though, really exposed that because their job is tax filing, not profit coaching, or not teaching you how's the best way to look through that. And the reason why I said COVID exposed that in our industry is because people were having to apply for PPP loans or EIDL loans. And they didn't know, okay, well, what was my gross revenue? Did I have a year over year, quarter over quarter reduction in revenues? They didn't know how to measure that. And then all of a sudden CPAs and tax preparers were swamped with trying to teach business owners, this is how you read your financials. Yes, you qualify. No, you don't qualify, on top of trying to file corporate and personal returns. And so again, COVID was a very eye-opening experience for a lot of business owners. But for those business owners that started their businesses after COVID, it's typically a default advisor you fall back to. You think that my CPA is going to hold my hand, walk me through everything I need to set up in accounting in my business. They're known for guiding you, but that's traditionally not what they do.
Yeah, we've had so many conversations about that too. We have talked to so many clients that just come in and say, look, we got a CPA, but we're still having surprises at the end of the year. We still owe a ton of taxes. We don't know if we can do anything better. And we don't know the right questions to ask, right? And so this is kind of how this was born. And what we do is, teaching attorneys, solo attorneys, and also other business owners as well. Like, we fill that gap.
Yeah. I mean, you and I both know we've met with tons of clients and prospects, and we've told them we're not in it to do tax returns. We don't make money doing tax returns. We're looking for those small law firm practices that really are looking for a trusted advisor that we can hold their hands and guide them through running their business. Because again, they go to law school to learn law, but nobody goes to law school to learn how to run a law firm.
Right.
And so when they default to their CPA, one of the other big things is that the CPA or the accountant assumes you understand the difference, that you understand the lingo, right? That you understand the difference between profit and revenue and take-home pay versus draws versus W-2. They kind of assume you understand all of that.
Well, shouldn't they though? Isn't that...
Absolutely. It's critical. I tell every client we meet with, if you don't know anything about running a business or finance or accounting, I was like, the one show you should go watch is Shark Tank, because the rule of the tank is if you don't know your numbers, you die. And it doesn't matter if you're a sole practitioner law firm or if you're a $500 million or $500 billion company. If you don't know your numbers, you will not succeed. And I know too many firm owners that make decisions based off of their bank balance, right? So they go ask the bookkeeper, oh, how much is in the bank right now? The bookkeeper looks it up and says, oh, you have X amount of dollars in operating, or you've got X amount of dollars in the trust account. And that's the trigger to them to go, oh, wait, we've got all this money sitting in the IOLTA account. Oh, that's right. I need to go bill. I need to go spend a couple of hours billing so I can collect some revenue, so I can pay bills, pay myself, pay staff, do whatever it is, you need to do. And so And the other thing is that we've seen small law firms hire very inexpensive bookkeepers and assume that the bookkeeping has been done right. So they get to the end of the year, they go file their returns, they bring their financials that the bookkeeper has closed out for a year end, and they bring it to the CPA or the tax preparer, and they prepare the return and they tell them how much in taxes that they owe, except for some of the entries that the bookkeeper has done are incorrect. They've either overstated revenue or understated revenue, or overstated expenses or understated expenses, which creates a larger tax liability if your net profit is larger than what it actually should be. So again, the person preparing the tax return, if they're going off of what the bookkeeper is doing, like we talk about, it's garbage in, garbage out. So that's really, the three critical components as to why your CPA or your tax preparer does not hold your hand and educate you on the differences between these terms.
I mean, we've seen, attorneys and business owners from all across the spectrum, from just startup to very established people making $250 up to millions of dollars a year, and they have different levels of complexity, but the idea is still the same, is that they need to know ahead of time what net profit really is and what the pitfalls to watch out for, right? I mean, is it reasonable to ask attorneys to become accountants? Yeah, I mean, the answer, we all know the answer to that is no, nor do they have time to do it, right? And so, what net profit really is important to understand. Also, what the pitfalls are too, so that if they ever look at, let's say it's June, and they're looking at the profit and loss statement or even their balance sheet, if they even get those, how do they know something's off, right? And how do they know, hey, this should be a clue for me to ask more questions, right? And that's where they need to be critical thinkers. And I know it's not easy, but how do we bridge that gap between attorneys being attorneys and also having a little bit of a know-how, right? And who is best fit to help them make those decisions and kind of bridge that gap, right? Because we've talked to lots of attorneys who don't even have the know or the knowledge of even what to look for. They have no idea until it's tax time, right?
Yeah, I mean, and so really, when I meet with a law firm potential client, I kind of start with the basics, right? So the first question is, do you understand what net profit really is? And it's super easy. Revenue in minus operating expenses is your net profit. And the biggest thing that I always tell law firm owners, I'll ask them, I'll say, hey, do you own your own building? They're like, yeah, we do. And I was like, do you have a mortgage on the building? Yes, I do. They think that the loan payment for the mortgage on the building is an operating expense. That doesn't, and it partially is. The interest you pay on that loan is an expense, but the principal that you pay towards the loan is not an expense. It's cash out of your business, but it's not an expense. So that's one of the things that I see is that, on profit and loss statements, when lawyers are looking at them, I've seen some financials where, it says building payment on the profit and loss statement, and the entire payment is being credited to expenses. And that's just, so then what happens is it's over reporting expenses. So
it looks like they're making less money than what they really are.
Correct. And so again, it's not cash into the business and cash out. That is not what net profit is. But that is the mindset that most law firm owners have, especially sole practitioner ones. And so you have to develop a habit of thinking, of actually making sure, one, that you have an accounting software and maybe it's integrated with your practice management software. And two, you want to make sure you're actually closing out your books. Do you have a bookkeeper? Do you have a CPA? Do you have an accountant that's doing it and doing it correctly? But lastly, three is, this is what always happens. And it's not just law firm owners, it's every business owner. They assume I'm paying somebody and they assume it's doing correctly, but yet they never go in and they never run the financial report. They never run the P&L to see if it's actually, does it look correct or not? If there's big old negatives in income, when you run that profit and loss statement, that might be a clue that something's up.
But what if they have bookkeepers that send them these reports, or well, they have bookkeepers that are just doing it? Are you saying that, attorneys should have the wherewithal to know to log into their accounting software and do it? And I guess the question is that really realistic?
Again, the biggest thing, Thomson and Reuters does a state of the legal profession report every year. They did one for 22 and they did one for 23 and they did one for 24, but it only focused on like the top 100 law firms in the country, the one in 24 that came out. But the one in 22 and 23 was interesting because it broke down the report in about, and I would say a majority of those respondents were small law firms. They weren't mid-market law firms and they weren't the super one, and they weren't the top 100. But out of the ones that were the small law firms, they said they spent roughly 20% of their time doing administrative work for the practice. So doing things like accounting work and whatnot. But what was also interesting was that they were trying to use technology in order to reduce that 20% of administrative time. Technology can work, but if you don't set it up from the beginning correctly, and if you don't know what you're doing, i.e. accounting software, then it's all you're doing is perpetuating the problem. And so that's one of those things that I think we bring a lot of value in, is that, we tell every client that meets with us, we're not looking to have 100 clients or 200 clients. We're not looking to prepare 600 tax returns. We're looking to meet law firm owners where they are and bring value. Be the trusted advisor where they can go, that they can trust we're doing it all and we're doing it all correctly. And how do we do that, right? So the first time we meet with a client, we want to do just something real simple. Like, hey, do you even know what your estimated tax payments are? No, I have no idea. Okay, let's show you how we can do that. And we really do just a real simple calculation where we literally put together a tax estimate. And so for the law firm owner, and we literally ask you, what's your projected gross income? What did you think you brought in? Billable that came into the operating account, not what went into the trust account. What do you think your projected business expenses are? And whether or not you're an S corporation or not. And again, that's a nuance that one of the things we'll when we ask clients, and you know this, like when we ask them, hey, are you taxed as an S corp? My favorite response is, well, I'm an LLC. And so even every lawyer, there is a legal status and there is a tax status. So I always like to remind firm owners, you can be an LLC taxed as a sole proprietor, or you can be an LLC taxed as an S corp. So you can be an LLC taxed as a partnership. So again, those are some nuances that, we like to make sure they're set up correctly from the beginning. But this is this super easy calculator that we give every person, that this is where we start with the fundamental.
Yeah, and we're offering this to anyone who wants it. We'll post the link in our comments, the link to go get it. You can grab it, and then you get an email with a link to this. So yeah, just go ahead and make your own copy. You can make a Google Sheets copy. You can download it to Excel, whatever's easiest for you. Yeah, but we highly encourage you at least to take a look at this. And if you don't have a system in place already, use this to help you figure out, hey, where are you coming in at for taxes? At the very least, make some quarterly payments. I mean, not everyone has to, but if you owe tax every year, 90% of the time you should be making some kind of estimated payment.
Yeah, and the other big takeaway for small law firm owners, if you're watching this and you're thinking, I am just too much of a mess to even, like, it's just too complicated. I'm going to start January 1. I'm going to start 2026. That's going to be my New Year's resolution. I'm going to start 2026. The only thing I would challenge you on is reach out, click the link, schedule a free 30-minute session with us, and talk through what some of your biggest challenges are. Because the one thing I will say is that the bigger of a mess you are, the more we can help.
Right. And I'll post another link to you if you want to book a call with us directly. I'll be fine. Happy to talk and happy to walk you through your situation and give you at least a game plan to go forward, right? Which is a lot more than what other CPAs or accountants or even consultants are doing, right? And so 30 minutes, hop on a call, we'll do that for you. If this is something that, if what we're looking at right here is too complicated or you just have other issues you want to talk about, for sure.
And the last takeaway I would offer anybody watching this, regardless of if you're a law firm owner or whatnot, but especially the sole practitioners, if you can't wrap your mind around, I don't know if my accounting's right, I don't know. And again, making sure your trust accounting is correct is critical, because in most states, if your trust accounting is not right in that trust account, then you have the potential to either have your bar license suspended or permanently disbarred from practicing. So even the
huge issue there for sure.
It's huge. It's a huge liability. And so in making sure how you're paying things out of certain accounts is also critical as well. You don't want to accidentally pay for, filing fees out of the operating account. If your client gave you a retainer and it's sitting in and you haven't billed the client yet. So again, there's some fine nuances to that. But lastly, I want to leave everybody with this. If you don't want a big surprise on April 15th, this is the basic calculator that we use, that we start with everybody. We give to everybody for free. The other thing that I want to emphasize, if you are so overwhelmed and you are just swamped, you've got too many clients, you don't have enough staff, you're trying to prepare filings, you're trying to get ready for trial, and you're still like, I just don't have time for this. If there's one other step you can take starting in the new year, I would offer you this one. And it's basically just a 3-bucket approach. I would tell you to have 3 separate accounts at whatever your local bank is. So, or whatever your bank that you're using is. And even if you don't want to go to the bank you're using and you just want to do an online account, there's tons of online banks you can utilize that do not charge you a fee. But one, obviously, is to make sure you have your operating account first and foremost. That's where you pay all your business expenses out of. That's how you pay W-2s, taxes, insurance, everything comes out of that operating account. The second thing is, I would say you just have what's called a profit account, right? So every deposit that you make into the operating account from trust, I would say take 10% of that deposit, and it may not even be a percent. If you can't afford a percent, do $100. $100 out of every deposit goes into this profit account. And that account is only to be used to take owner distributions, to pay to owner distributions, or if you want to give yourself some extra money, maybe you need to pay for Christmas, right? You need to pay for the kids' Christmas presents or whatnot. Put some money in there. And lastly is set up the tax account. And again, that's where you want to take about 20 to 35%, again, depending upon what state you live in. And you want to deposit the net profit, 25 to 35% of the net profit into here. So when you got to go make that quarterly tax payment, you're taking the money out of this bucket. You're not worried about how much cash I've got in the operating account or how much cash do I have in my little owner's profit account. You've got a separate tax account that you can do that. And again, if you can start to do it every month, if you just develop those habits, if you can just do this little change starting for the new year, 26 is still going to be stressful, but at least you can start clean going forward and start developing that small habit of, the next April 15th won't be such a surprise. And you can start to develop that small little 2% habit to where you can do a little bit every month so it doesn't seem so overwhelming at the end of the year. Because I know, Stefan, you can speak to this as well, is that how many clients come in and they are super stressed after December 31st. They come in at the end of January or February, and then there's nothing that you can do.
Yeah, we see it all the time. I've seen it all the time in my practice. You've seen it all the time in your practice. We see it together. It's just insane. It's really unfortunate and disheartening to tell the client or tell the business owner, like, look, I'm sorry, there's nothing we can do. If you would have come to me 6 months ago, we could have worked this out. We could have figured something out to save some taxes. But that's just how we play. That's just how it works, right? So again, just in closing, thanks for watching, everyone. Appreciate. Hopefully you got some value from this conversation. And again, we'll post a link to the free quarterly tax estimate calculator. And we'll also post another link to book a time with us if you want to chat with us about your particular situation. So thanks again, guys.